Welcome back for another look at the charts. Today we'll have a look at the charts keeping Euro USD and cable in place, yet also replacing prior charts with Euro GBP and USD CAD. Hence today's pairs are Euro USD, cable, Euro GBP and USD CAD. And with no time to waste, we move to Euro USD's 4-hour chart. The Fed's decision yesterday seemed to have little effect on Euro USD, keeping it in familiar waters. In the next few days, we expect financial releases to affect both sides of the pair. Yet on a more fundamental side, today's Eurogroup could affect the common currency, while any possible renewal of lockdown measures in some US states, such as California, may be affecting the USD side. Euro USD maintained a sideways motion for the past 2 days after its ascent, and today seems about to break the upward trend line incepted since the 26th of May. Should the pair's price action clearly break the pre-mentioned trend line, we would switch our bullish outlook for the pair in favor of a sideways motion initially. Should the bulls retain control, we could see it breaking the 1.1410 line and aim for the 1.1480 resistance level, while even higher we find the 1.1545. If the bears take over, Euro USD could break the pre-mentioned trend line, the 1.1345 line, and aim for the 1.1285 support level, while the lowest support line is the 1.1240. Please note that we maintain a rather tight support and resistance levels for the particular pair. Moving now to cables for our chart. Besides the US fundamentals, cable could also be influenced by any developments on Brexit, the UK financial data due out tomorrow, as well as any announcements from BoE. It should be noted that BoE Governor Bailey's comments yesterday that the COVID-19 recession will be different to others, and that green shoots have begun to appear in the economy now that the worst of the lockdown has passed, seem to no effect. Also, the political instability in the UK may weigh on the pound. Since our last report, cable followed the upward trend line incepted since the 18th of May, even steepening its slope at some point. However, since yesterday, the pair's price action has broken the upward trend line after reaching a 3-month high. Hence, we tend to switch our prior bullish outlook in favor of a sideways movement initially, albeit we suspect that the bears may be eyeing the pair. If the pair finds buying orders along its path, once again, we could see it breaking the 1.2725 line and aim for the 1.28 resistance level, marking the pre-mentioned 3-month high, while even higher we have the 1.2880 level. On the other hand, should the pair come under the selling interest of the market, we could see it breaking the 1.2645 support line, which contained the pair's bearish movement on the 9th of the month, and aim for the 1.2580 support level, while even lower the S3 1.2515 prevented the pair from falling on the 4th of June. Moving now to Euro GBP's 4-hour chart, Euro's strength has been very evident lately and has been bolstered by the ECB's unexpected addition of 600 billion euros to its pandemic emergency purchase program. Adding to that, very recently the European Commission proposed a 750 billion euro stimulus plan, 500 billion euros of which would be given in the forms of grants to economies and sectors hit hardest by the coronavirus pandemic. Today's Eurogroup meeting could affect the pair's direction decisively, as noted in our Euro USD analysis. On the GBP side, factors affecting the pound are the non-progress happenings over Brexit, which tend to weaken the currency. Then again, some fears also persist over possibilities that the Bank of England could move into negative rates and may put some pressure on the sterling. Technically, the pair has been moving in a sideways motion since the 0.90 resistance level and the 0.8875 support level during June. Levels to the upside surpassing the R1 are the R2 0.9135 line, and even higher the R3 0.9240 hurdle. In the opposite direction, below our S1 0.8875 level, we have noted the S2 0.8715 support line, last seen in the first 10 days of May, and even lower the S3 0.8620 support barrier. The RSI indicator below our chart signifies the pair moving in a sideways motion with some bullish tendencies, as it is currently running on the 60 level. Moving now to USD CAD. In the 4-hour chart, the CAD is significantly related to price action in the oil markets, and traders should have in mind the weekly data figures regarding the oil production demand. Any rise of oil prices tends to support the CAD and vice versa. Technically, the pair has broken above the S1 1.3425 support level in the latest 4-hour sessions and is currently aiming for our 1.3520 resistance level. It should be noted that the pair has broken the downward trend line incepted since the 26th of May, hence we abandon our bearish outlook for the pair. If the upward momentum persists, then the R2 1.3620 line could become a target, with the 1.3730 R3 being our top level in case of a sudden greenback strengthening. In the opposite direction, the pair could return lower to retest the S1 1.3525 level. Below that, the S2 1.3345 line and the S3 1.3260 are also possible stops if the bearish movement is strong enough. Please note the RSI indicator has formed an upward slope with the line aiming at the 70 level, implying possibly that the USD bulls have been stronger in the latest sessions. We hope that you found something useful in this report, and from all of us here at IronFX, best wishes for solid trading.